Yeah, so the big question, we've obviously had a couple of years of very strong equity market performance, and the question is whether or not this continues. I think the two biggest themes, and we talked about this in our outlook, are questions around AI and are we in a bubble? Can that momentum continue? And then the second one is kind of the countervailing force of increasing global fragmentation and what that means. And then on top of that, you sprinkle on some questions around midterm election politics and policy. How is that going to impact us? And there's some, I think, healthy skepticism around the outlook for equity markets, but we think the opportunity remains.
Steve, are your clients bringing up geopolitical concerns? I mean, are they actually talking about and saying, how do I position myself now?
You know, on the margin a little bit, although I think we've done a pretty good job training clients to remember that geopolitical events rarely have long-term structural impacts on markets. You may see, a short-term market dislocation, but the fact that we had, the bombing of the nuclear facility in Iran and what happened in Venezuela and oil markets have barely moved is sort of a reminder that you shouldn't over-index on geopolitics. Now, in a world that's increasingly fragmented, we are getting questions around what you can do in your portfolio to diversify, and we do think that gold remains the best way to continue to do that.
Gold?
Gold.
At JPMorgan, I'm shocked.
Yeah.
I can't imagine the vault under the new building. Could you see it? It must be, it's like Fort Diamond or Fortress Diamond, something like that. Tell me how you fit ETFs in. Are the days gone where you do individual security analysis and buy individual stocks at a private bank?
No, the answer is no. I mean, that's not my role, but we have a great team of equity strategists and researchers, and we think there's still a great opportunity.
So you're not just going to the ETF, do this, own 10 ETFs.
It's a balance. I mean, whether it's single stocks or active managers and then passive strategies, it's not a one or the other. In our view, it's a combination of the two, and focusing on, where can you use passive exposure in the most efficient markets, and where are the opportunities where you're going to see greater dispersion, less efficiency. That's where single names or active managers can come into play. And one of the things we've been talking around with this AI story and the AI beneficiaries as this broadens out, the opportunity in active management related to identifying who are going to be the biggest winners in that space beyond the tech sector, I think will be a story that will play out over the next couple of years.
I want to get back to gold. Why are you so high on gold? I mean, some are saying, really like gold at $5,000 an ounce. Is that a possibility for this year? It
is. We actually think, our target is 5,200 for the end of the year. We've been bullish on gold since the beginning of last year, and many people thought that we were too bullish then and too bullish now. To us, it's really a kind of a multifaceted story. The biggest driver of what we think will lead to upside in gold is the diversification of central bank balance sheets. And last year was an important reminder with everything that we saw with the weakness of the dollar. Central banks around the world are looking to diversify. That's a big source of demand. And then on top of that, in this world of greater fragmentation and political uncertainty, gold is where people are looking as that diversification benefit.
When we hear investing in gold, break it down, because what are some good ways people can get exposure to gold without like going out and buying the bars and sticking them under their beds?
Yeah, I mean, generally speaking, we want our clients we prefer exposure to the metal itself rather than to the gold miners. And you can do that either by buying physical gold or buying ETFs that represent ownership in the physical commodity. But it's a commodity over equity story in this case.
And any other precious metals that you're high on right now? Because look, silver actually outperformed gold, we know, last year. That seems to still be on a tear. Copper's been going crazy. Platinum, tin. I mean, it's kind of like pick a metal, any metal, right?
Yeah, I mean, it's been a fantastic run for the commodity sector and metals in specific. From the precious metal perspective, gold is our preferred way to play it. But one of the things that we are looking at is the broadening to some of the more industrial metals. We do think part of our outlook for 2026 is a broadening of this growth story, a cyclical recovery, and obviously with the investment in infrastructure and AI, those industrial metals are going to be beneficiaries.